Let me talk to you also about what we are seeing as far as the digital landscape is concerned. And I know that this is a space that you've been actively looking at and very confident of its growth. Whether we talk about UPI transactions, so on and so forth, we've seen the steady up move. Today, of course, reports about Paytm being in talks with another conglomerate for a potential deal. We understand that those talks haven't moved any further beyond the preliminary discussions. But how do you see the landscape shaping up? Do you believe that we are likely to see significant consolidation in the fintech space?
Yeah, Shirin, something interesting is happening in the fintech space. In the sense, the 60, 70,000, or maybe now 80,000 entrepreneurs that you have set up. I've gotten to see a few of them primarily in the financial services sector, and it's an amazing story. The platform value that they've created and what the platform can do is unbelievable. The problem is that their investors remind that all you need to look at is getting to be a unicorn and pile up losses in the interim, which I think is an inappropriate story, path, and that has led to this story that we are talking about. Is it stable? Will it lead to mergers, acquisitions, and all? So I think there's a disconnect between value creation in the platform and valuation expectations. I think this is what entrepreneurs would need to first address, and their investors will first need to address. Thereafter, progress will happen, because progress certainly will happen, and these people are contributing a significant part to that progress of our economy. Now, coming to again, what is happening at the deep end, as it were, of the technology platforms. What I've seen over the 5 years, in the last 5 months, is the cost of technology has dropped to an extent which is unbelievable. I'm a strong believer in Moore's Law, and that is how we did the rollout in my old bank, ICICI Bank, going back 20, 25 years. But today's costs are just unbelievable. When I started taking a deep dive, as it were, I had an expectations, let's say, technology costs would be X, but now I believe that technology costs really are not even 0.2X, maybe 0.1X, of what I had in mind just 5 or 6 months back. So with this sort of change in technology costs, this is going to do the same thing that low cost of data has done to the wider public. That is, the Digitex and new builds, as it were, the new companies, will be able to come into being at very low cost. And they could provide great service to the country. And there will indeed be some disruption as a process. So we will see some exciting things going on. And the good thing here is that we are at just the start of this curve. And the whole digital process and the impact of digitalization in India and its impact on the GDP will be probably the next exercise that economists should really work on. I was just looking at numbers from China the other day. From 5 years back, almost nothing. Today, last year when I saw it, it was contribution to GDP was 35%. This year, the number is 40%. So my belief is that 5 years from now, if you look at India, how much incremental contribution will be there from the digital economy is going to be, to me, a very exciting number. And that number, I would think, will not be less than 20%. I think it's in the 20-25% of the economy. So we are all undercounting our growth. So we have our growth as put out now, but nobody has a fix on what will digital India contribute. It's going to be a significant part, not only in terms of growth, but also in terms of employment generation. We don't have a fix on the employment generation that's happening. Now, we might need to really recategorize the workers, because, for example, if you look at the delivery system that's happening, going from e-commerce, we call them gig workers. I think we should not call them gig workers. We should title them properly. We should make sure they're under a structure which is properly implemented. And why should we keep, and we should bring them to the center of what I call the organized labor market. I do not know where exactly they fall in today. We should bring them to the center of the organized labor market, so that we also have a proper idea of what really is employment and what is unemployment. So I think there are exciting things we could do. But bottom line, Digital India will contribute a significant part to our growth going forward.
So let me just try and get you to labor on that point a little bit more specifically, sir, in the context of geo-financial services. You do believe that this is an exciting time as far as the Digital India story is concerned, but specifically for the geo-financial services aspiration, what next and what can we expect?
Again, at this stage, we are working out the whole rolling out in a way the plan, not yet into execution mode. So all I can say is whatever was said in the demerger document stays. We are working on that to get the demerger out. And it would be premature for me to say till the plan is approved and we roll out. But the background that I indicated to you, the cost disruption that I indicated to you, the leanness which you can build, I think all going to segue into any company's build out into including geofinancial services. So we are looking at a very exciting time of entry, where I believe there's another disruption that's happening in the technology context, the disruption happening in the aspirations of our people, and the growth momentum. So all should bode well for Geo or any new aspirant who's coming in at this point of time with virtually a clean slate.
Mr. Kamath, I want to go back now to the real infrastructure story. We just talked about digital infrastructure and the digital play, but let's go back to the infrastructure story in the context of NaBFID. The MD of IIFCL, while speaking to us here on CNBC-TV18, said he believes that India requires a specific law for infrastructure. Now, A, do you believe that that is necessary? B, how is NaBFID's role going to be different, for instance, from IIFCL's?
I cannot comment on what he will say because I do not know the context in which he said it, and I have not looked at it. I think NaBFID's role is very clear in its charter, and I think it's a very, very expansive role. And its role is, I would think, not only just a DFI, but also a catalyst. It could catalyze other institutions and so on. So I think the role, there are, I think, points where the roles would overlap in a way, and that's good because we need more long-term players. But the charter, to me, appears to be much wider than what is there in any other institution, and that's the reason why this institution was created. So, I believe it is needed. I believe it is needed, given our earlier discussion in terms of what we see as the growth momentum over the next 25 years, the role of infrastructure, and the role of government in that infrastructure. So all these require institutions with long-term capability. Shirin, in this context, what I want to basically touch on is, we have had banks doing the role of a true infrastructure debt provider as an interim measure. After 2000 or 1995, 96, when the existing DFIs in a way did not have access to funds and went out of that role. Today, we have a situation where those funds are available. Those funds are available in the system through the insurance setup, through the pension setup, and even through the mutual fund setup where savers are going in for various instruments and so on, and directly from the capital market. So there are multiple sources available today, and funding is getting done through a variety of means, as you see, long-term funding. So honestly speaking, the banks can do long-term lending only for a short time, not as a consistent strategy going forward, because increasingly their funding is a shorter and shorter term. And again, as more technology comes into the marketplace, as it were, long-term instruments can be made to look like almost monthly servicing instruments. I just heard that NHAI has in mind to issue monthly interest to its bondholders. Can you imagine the change it will make? Here's a government institution, AAA, which the public looks at as government, offering you monthly interest rates which are significantly higher than either any rate that a bank can offer. So I think there's going to be a whole lot of disruption in terms of the way banks will need to handle their own growth and their deployment of assets. And if you have on an average 1 year money or less in terms of tenor, lending it out longer is you're putting your neck on a line with you do not know the consequences. So I think bankers will be more cautious in lending long out. And that is why I think the government's move in setting up NaBFID is very timely. And we need to create an ecosystem to finance infrastructure. And I think that's going to happen. We will see it in the next 2 years.
Well, that certainly is the hope. Mr. Kamath, let me end by asking you, you talked about the growth momentum. So at this point in time, your take on where things currently stand, how confident do you feel about us being able to hold the kind of momentum we are seeing? And if I were to ask you about the single biggest risk that we face today from an economic point of view, what would that be?
Yeah, the single biggest risk I'll address first, simply And all along it's been unpredictable oil price. But I think we now have an indication what is happening to oil price for a very simple reason. We are not seeing the world grow at a pace that they expect. It is very clear. And I've been tracking numbers from China where the growth numbers look really low, from what feedback I have, which I continue to have in terms of what's happening there. Europe, we all know what is happening. And the US, I think, is just treading water, as it were. So given that the demand for oil, demand for various products is going to be low in the outside world. So we are lucky. So the oil price should then be stable. And we have our own market to cater to, which is growing well. So yes, it may be a bit of an insulated story, but I think we will weather this well. In the meantime, we drive our own strength through not only the digital movement, but through exports of what I call knowledge services, which is not going to slow down, because the world will need that. So we are in a sweet spot. See, growth stalls. When does growth stall? Growth stalls when there is no demand for what has to be produced. And in India's case, the headline, what has to be produced is put that infrastructure in place, whether it is roads, ports, airports, rail systems, whatever, airlines, whatever. That needs to go in. And to look at where we are and where we have to go, get a long runway. So I don't see demand as a constraint. So if you have a domestic demand, that creates employment, that creates aspirations. I don't think our growth story is going to get derailed on that account. What we need to make sure is that we nurture it properly. And as we discussed in the earlier segment, the key part of nurturing is steady policy, incrementally better policy, which is being done, and interest rates which are stable. The disturbance could have been caused, the shock could have been caused by external oil and such factors, not by demand, because we are in a way insulated. So I think we are in a good place with digital providing as a nice wedge as we go along, and all of us need to encourage that growth.
Mr. Kamath, always a pleasure. Appreciate you joining us here on CNBC-TV18 on the record to take us through what you make of some of the important developments that have taken place and taking shape over the last few months, and more importantly, what the road ahead looks like. Appreciate your time and thanks very much for joining us. That is KV Kamath, Chairman of the NaBFID, with his take on the state of the economy. We are going to take a break, but return with the market action. Don't go anywhere. We're back in a minute with more.